Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture of me, Ryan Huang. We are taking a closer look at what's going on with the Chinese stock market, and they are extending their bull run. Interestingly enough, that's despite some of the data we are getting around the Chinese economy, which has been not as bullish. For example, we've been seeing consumer prices rather flat, and growth when it comes to data like factory activity, not so great as well. Investment and retail sales also disappointing. Despite all that, the markets are pushing higher. We'll also take a look at what's playing out in the US markets, but let's say hello to Vasu Menon first. He is the Managing Director for Investment Strategy at OCBC Bank. Good morning, Vasu. How are you doing today?
Good morning, Ryan. I'm very well, thank you, and I hope you're keeping well too.
Yeah, we are doing well here, and also doing well is the Chinese stock market, which is looking quite interestingly higher every time we take a look. And just to give you a bit of color here, the Shanghai Composite Index now at a decade high, and you have the CSI 300 Index taking the advance from this year's low to more than 20%. What's driving the optimism, do you think, of these Chinese markets?
Well, a number of things driving the optimism. I think the fact that, the US-China trade war that investors worry about is not really playing out. I think the can has been kicked down the road. The US is not ready to up the ante against China in any big way. They've extended the deadline for trade negotiations, and that's provided some relief for investors. I think more than that, the first half economic growth rate was strong. But as you mentioned earlier, the July numbers were not great. But first half actually, in some ways, exceeded market expectations, perhaps because of some degree of front-loading as well, ahead of the tariffs. I think the other factors at play, the US stock market has been the only game in town for the last 16 years. The S&P 500 is up more than 1,000% during that period. The US dollar has been strong. But now with Donald Trump in power, and with tariffs and the dollar weakening, I think investors are starting to look elsewhere. In domestic China, savings rates are extremely high. Household savings in China are huge, 7 trillion yuan. That's massive. And household savings rate in China is close to 30%, which is extremely high relative to global averages. And equity participation in China is very low. It's only 5% of household wealth compared to 50% in the US. So, the tide is turning. If you take a longer-term picture, the tide is turning. And I think that is fueling the Chinese stock market to higher ground as well, despite the economic backdrop, which may not seem the prettiest at this juncture.
Yeah, so I guess the question is, has it run ahead of itself? You need the fundamentals at some point to kick in. Is this run sustainable? Because we are getting some concerns that a bubble is forming. Do you see any red flags here?
Well, I don't see a bubble just yet. It may see a pullback. I don't see a bubble, and I'll tell you why. Because if you look at the CSI 300 index, which comprises A shares on the Shanghai and Shenzhen stock market, from the lows in April this year, it's appreciated 24%. Now, if you look at global equities, from the lows this year, it's appreciated 28%. If you look at Asia, ex-Japan equities, it's appreciated more than 30%. So in relative terms, the Chinese stock market is just keeping in sync with what's happening to other global markets worldwide in Asia as well. So the issue here is that, the economy is not doing great, earnings is not great, so why is the stock market doing as well as, elsewhere in the world? I think, there are a few things, as I mentioned earlier, that is driving the stock market. It's possible that the economy could pick up steam with policy stimulus. Don't forget, we've got the fourth plenum coming up in October this year. This is when Chinese leaders meet to plan for the next 5 years. You could see policy stimulus ahead of that. You look at the 10-year bond yields in China, they're actually going up despite the deflation we talked about earlier in China. Seems to imply the financial markets are optimistic that the economy is resilient and it could actually hold up relatively well. So I think, at the end of the day, investment is all about relativity. The US stock market has done very well. Other markets have done well. And you're seeing some degree of rotation taking place out of those markets into China. But having said that, you're right. The market had a very strong run and the valuations are not high. The MSCI China index is trading at less than 1 standard deviation below its, 5-year average. The CSI 200 index, which is what you mentioned, hitting record highs, still trading, about 1 standard deviation below the 5-year average. So in terms of valuation, the Chinese onshore markets are trading at about 13 times. Not expensive, but the market had a very strong run. It may need to take a breather, pull back, and this is normal. In stock markets, bull markets, nothing goes up in a straight line. You must expect pullbacks from time to time. And the same thing could happen with China, but it doesn't mean game over.
Yeah, let's talk about OCBC's approach to China. And every time we talk, I know you've got a long-term look on where things are going. You're quite optimistic on the market in China. So looking at what's playing out here, does this give you more confidence to get in with more exposure? Or with what's playing out right now, is it time to take profit and rotate into certain sectors? What's your playbook here when it comes to China?
I think when it comes to China, our view is that we've been probably a bit positive on China. In fact, it's one of our old weights in our regional asset allocation calls. But, at the same time, we tell investors to be prudent. I think investment is not about falling in love with one particular country, one particular area, and just throwing all your money in there. It's about diversification. So it is about, getting exposure to China within a diversified basket. So we do not encourage investors to throw a lot of money into China. Chinese stocks are highly volatile. It's not meant for everybody. You must have the risk appetite. For investors who do not have the risk appetite, we tell them, look, stay away from China. For those with the risk appetite, we tell them, sure, invest in China, but manage it within a more diversified portfolio. Have some bonds, have U.S. equities as well, despite the fact that, it may not be most colorful right now, and Europe and other markets as well. So you've got to manage it within a diversified exposure, not throw all your eggs in one basket.
Yeah, talking about U.S. equities, we have headlines out of the U.S., and that's with Donald Trump firing the Federal Reserve Governor, Lisa Cook, on allegations of mortgage loan fraud. What does this mean to you in terms of being an investor? Is this something to worry about?
I think it's something to watch carefully, but this is unprecedented. You've never had a president fire a Fed governor without cause. And at this juncture, Lisa Cook has not been convicted of any crimes. The DOJ has talked about investigations and nothing has happened so far. For a president to act in this way is unusual. And Lisa Cook is taking it to court. She's suing the president. She's filing an injunction to stay in the Fed. And it's possible that the courts could rule in her favor, because Trump may not have a strong enough case. In which case, I think the markets will be happy. There'll be a sigh of relief in the markets. But at the same time, if for whatever reason court rules against Cook and she's out, that's not very good for markets, because that means that the Fed is becoming more and more politicized and Fed independence is going to be compromised, and that's bad news. It means that, the markets will start losing confidence in U.S. treasuries, yields could go up, and U.S. assets will look less appealing to investors because the political system starts tinkering with Fed independence. That's bad news because the Fed is usually the last stop in a crisis, and they may not be there to support global markets as they did, back in 2020 and, other crises under a watch by President Trump. So there's a risk of that happening. So this court battle that Lisa Cook is going to undertake with Trump is going to be very crucial. The outcome is going to be crucial for Fed independence.
All right, we'll keep it there for now. And we'll be in conversation with Vasu Menon. He is the Managing Director for Investment Strategy at OCBC Bank. Vasu, thanks as always for your time and insights.
Thank you for having me on the show as well, Ryan.
All right, catch you next time. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.